Hello and welcome to another episode of the Swing Trader Status Update. This is our weekly show that we do, and today, of course, is February 4th, 2025. So we are going to talk a little bit about the volatility that we've been seeing, and to help us walk through the upside of reversals, the downside of reversals. The long and short of it is Mike Webster, our senior market strategist, who joins me every week. Usually, it's the two of us together. So, how you doing, Mike?
Good, man. It's been busy, huh?
A little bit, a
It's
little
been
bit.
like
So.
so active, and there's so much to do and so much to talk about. So it's been a fascinating couple weeks.
Yeah, so let's get right into it. Here's the Nasdaq Composite. One of the things that we've been talking about is kind of how things really shifted after this bad break that we had on December 18th. That was a Fed reaction, where there was some questions, right, of what that cut cycle was going to look like. There was certainly a pause. One of the things that Jerome Powell was saying at that point was, oh, well, tariffs, we don't know what's going to happen there, what that could do to inflation. And, we saw a lot of back and forth. And now tariffs did come into kind of the full picture here, as we saw that threat happen on Friday, executive orders signed on Saturday, and then some tariffs getting pushed out. Canada and Mexico both looking like they're getting a month reprieve to kind of get their houses in order and kind of do some of the things that Trump was asking of them. And so we saw this big downside reversal when the news came out on Friday, and then an upside reversal on Monday, and a nice follow-up today. So let's dive into it.
Well, what is President Trump going to do tomorrow, and what is President Xi going to do?
Yeah.
Exactly. So,
Right.
we don't
Crickets.
know. Yeah,
Yeah.
nobody knows, right? Jimmy doesn't know. No one knows. So we just have to play it off of the charts. But that makes it very difficult when you're in such a heavy news-driven market. It's kind of like going into earnings every day,
Mhm.
with the general market. So this is as tricky as it gets. So what you're doing is trying to look for clues. Like, this is a giant poker game, and we're trying to get a sense for the market of where they stand. So again, you laid it out exactly right. December 18th, when the Fed came out and basically said they were going to start playing politics. It is what it is. And they're concerned about President Trump's tariffs on that side of things. They weren't concerned about anything about cost cutting or what that would do, but that's what they're focused on. So that's fine, whether you like it or don't like it, or agree or disagree. It's the reality that we're dealing with. So now the Fed is basically kind of paused, and probably not going to do anything for a lot longer than everyone thinks, because they want to get through all this tariff, talk. So the market is digesting that, and has been since December 18th. Now, all the news with Canada and Mexico and China just makes it, so difficult, because we don't know if there's going to be other countries in there as well. This is how President Trump likes to negotiate. It seemed to work out really well back in his first go around, but it can be a bumpy ride along the way, especially for active investors. So you've got to be kind of a little proactive as well as reactive. So on Friday, as we were stalling and we were trying to get up to 20,000 on the Nasdaq and had a downside reversal, especially going into the weekend, we reduced exposure a lot, because you've got to be nimble. And the expectation with the downside reversal like that, forget the news, forget it all about that. But just looking at the chart, that would tell you would expect further weakness on Monday. And that's exactly what we got. And frankly, we didn't get as much weakness as I was thinking based on the news that we had, because at first we didn't know that Mexico and Canada were going to get this pause, and based on the comments that I was seeing over the weekend, I was thinking we were going to be down 3% plus Monday, if not more, maybe all the way down to the lows of this base that we're forming. So that was our first clue that the market is starting to deal with all the tariff stuff in, kind of a constructive fashion. It doesn't mean we're not going to have intraday hits whenever a new news comes out on it. But if you look at the major reaction we had on the 18th of December, then we had the AI break that was last Monday. And that really was isolated to, I think the best way of looking at this is the RSP, which is the equal weight of SPY. And on the 18th of December, that got smoked. That was down like, 3% on that day. And so that's a way of measuring breadth that I like to use, where it's just the average stock down that much. And then last Monday, we were actually up. So the average stock, even though things like, let's pull up NVIDIA, because I think that's what comes to mind with everyone is, when that was gapping down, your average stock was net positive within the S&P 500. So it's telling you that, that particular news was now just isolated to anything AI related. Then when the tariff stuff hit, it pretty much was across the board. We can go back to SPY, and look at yesterday's action. I mean, Friday's action and yesterday's action is what you would think with negative news. So there is this when you interpret news, it's when it's bad news, you want to see how bad does the market take it, and does it take it worse than it should or better than it should. And I think yesterday it took it better. I mean, it was trying to hold as close to the 50-day as possible, even before we found out that Mexico and then, Canada were going to get, a 30-day extension essentially. So I think the market is stronger than we think, but that doesn't mean it's going to be easy. And it frankly hasn't been easy. We've been able to navigate these waters a little bit better. This year, we've made the changes that we've been talking about over the last few weeks. And I think that's helped out with this strategy, but it's still very hard. But when you close at the highs like we did today, even though we're down in after hours because Google had disappointing numbers and lots of earnings this week, that when you get a close like that, where you're back above your 50-day, back above your 21-day, and you close at your highs, your expectation is to go higher the next day. Just like on Friday, the expectation was to go lower. We went lower. Yesterday, closing up at the upper half of the range, back above the 50-day, our expectation was to go higher today. So that's good, because when the market's doing what you would expect it to do, even if it's not up every day, that gives you confidence to put on trades. When it's really all over the place, let's go back to February of 2020, right when the COVID hit, or actually we can go to March of 2020. And during that time, it was, maybe go out even further. Go out to April, I'm sorry. Yeah, you see all those wild days in there, whereas one big up day and then a big down day, and then on the way down, big up day, big down day. And even after we hit bottom, it was all over the place, where you just couldn't make sense of what the market was going to do. Because on those days that you pointed to, I mean, your expectation is what, Justin?
Yeah. You close that bad, or you close this good, you expect, maybe a little bit of follow-up, but it went down significantly.
Yeah.
Another one here, down significantly. Another one here, down significantly. So yeah, there was just no rhyme or reason. One day up was almost like, oh, well, now I expect to go down.
Yeah. And that was
so no trend, right?
Yeah.
Except it just kept going, further and further down. But again, that was an exogenous event. Another one of those once in a lifetime events that I feel like I've had 3 or 4 of
every week almost, it feels like now. But
yeah,
the point with this one is the safety trade is to wait for your low to get, let's go out to July of that year. The safest way to play a market like that, when it's choppy and it is news driven, is to wait for that low to get above your 21-day. So if you could point to where that started happening.
Well, initially started happening here, but we were still below our 200 and our 50. So You
That's
know?
that's a valid point, you know.
Yeah.
But in general, that was a unique time being under
Yeah.
the 50 and the
Mhm.
200. But in most cases, if you wait until your low is above your 21 day and you start trending at least 3 days above that, that's when it's safer to kind of push it. The
Mhm.
downside is if you look by the time you're 3 days with your low above the 21 day versus where you were at your lows, you're a mile away. So you're giving back all that bounce back. So it makes it very tricky. Now let's go back to our current market and let's look at the SPY. Um, and so we got our close back above it today, but we haven't had our low above it, and we
Yeah.
certainly haven't had that for 3 days. So,
And we did get it, we did get it in here, and
mhm,
especially what was interesting is RSP was, you know, I mean, it got above the 21-day back here
yep.
and actually had 10 days, above it. So it was looking very different, but again, it just, this Monday kind of ruined that look as well.
It really did. And so now this looks kind of like a cup with a low handle. And, low handles are, they're just something that you don't want to take too seriously. You want to wait for it to form a higher handle. So if for the RSP side of things, we want our low to get back above our 21 day and really get above the highs from, 3 or 4 days ago and to live above that. And that'll give us a sense that the breadth in the market is healthy again. Right now, it's if you just looked at the closing prices of this and you didn't look at the extreme, certainly the extreme yesterday doesn't look that bad. But the reality is we were down at those lows yesterday. And
Yeah.
so there was a lot of damage to your average stock. So with that, you've got to be careful. Now we're slightly on margin, so that those two don't
Well,
really.
well, and before you
Yeah,
move on, I mean,
yeah,
I think it's worth mentioning that at the end of the day, because of the downside reversals here, we had gone down to 54% invested. So
yeah. From being
the
on margin, I think we were maybe 110, 115 intraday, maybe.
intraday, right?
Yeah.
But again, once those downside reversals hit, there was a lot of stuff coming off. We didn't want to overdo it, but at the same time, we had to react to the fact that okay, we've got a lot of downside reversals. That puts pressure, on especially going into a weekend.
Mhm.
That puts some pressure on us to not be too far ahead of our skis. We didn't want to get too light, but it did give us the opportunity because for those of you that are remembering, and you know what, I'm sorry, I was on RSP and I wanted to be on SPY. The way that we dropped on Monday, I mean, that was kind of as bad as it got,
Mhm.
for the Nasdaq, and the S&P 500. It kind of did that in the opening part, and really kind of went up from there. So we had those upside reversals, which is why we got heavy again.
Yeah, so it basically, you don't always get it to play it right. It's hard to play it right in the market, but this worked out. I mean, we basically exited our, core AI exposure with the exception of, QLD, before last Monday's gap down. So we were out of, the GEV and the
NLR
UTES. Yeah.
and BST. And again, that's part of just, again, it's not that these were necessarily doing anything wrong. It was just, oh, okay, well, they're getting extended. They're undercutting the lows of the last couple days.
And at
And
that point, the GV looked like it was going to probably come into 400. And
mhm,
I was frankly expecting us to, put it on an upside reversal if it came into 400. We didn't foresee the news coming, but it's just swing trading allowed us to get out of that one. And let's go to the UTES, which is kind of a similar thing that, it was up there. It had broken out. It was just kind of hanging in there. And it felt like, dead money that it was going to probably come down and test the lows from a couple days before. And we just decided to go ahead and exit that and, ahead of time, it to just lock it in from a swing trading standpoint, getting ready to buy it. Again, when it's set up, we didn't foresee again this big gap down. And then what was that other one? NLR? Is that
NLR. Yeah.
NLR? Um, And same thing there. We took it off. Now this one looked like it was going to handle out. Frankly, it was kind of a cup with handle, or you could look at it as a double bottom formation, and it looked like it was going to do a handle, either a double bottom with handle or a cup with handle, depending on how you wanted to look at it. And so I was expecting that to come in maybe a week and a half, and then we were going to get it, be able to buy it back. So when you're swing trading, sometimes it works out for you of exiting. Now, the downside is sometimes you exit and then the weakness doesn't happen and it keeps going up without you. And let's just frankly go to, let's go to Spotify, because we exited that before yesterday. This is the downside. We exited this one. We had locked in most of our gains. We had a quarter left yesterday, and decided to take it off going into the earnings because it was a risk event and it could have gone down as much as it went up. I mean, I did keep
I
it
still do have a position in this.
Yeah, I kept my position personally because I was willing to take that risk myself, but I didn't want us to do that with SwingTrader. So we locked it in. So now we can't put it on as a swing trade up here because we got to wait for something to trade against. So we're going to, that's the downside to being active. So there's an upside and a downside. And so that's why a lot of us balance it out. In some of our accounts, we swing trade, and the other part we position trade. And I think that's what everyone should really do. One is not better than the other one. They just kind of they balance together nicely, So anyways,
well, since we're talking about some individual stocks, maybe we, shift over to some of the other ones, because, another shift that we've done is, rather than kind of start small and add to positions, we're starting large and subtracting from positions, but we're not treating them all that way. There are some that are the higher rated stocks, let's say, and again, this goes back to Webby's system of what he suggests for people to do is take a look at your portfolio, rate your stocks A, B, C. You shouldn't have that many Fs, Ds or Fs, but once you do that, you kind of know, okay, these are the stocks that I want to get more money into, and these are the stocks that I can use as a source of funds, or that'll be, if there's any trouble, these are the ones that are first off the boat. So to that end, one of the ones that we are back into after having taken a step back for a while, this was one that we, were treating as an A-rated stock. It didn't really work out that well after this. We held through this earnings, and that downside reversal just kind of ruined things for a while.
It did.
And then, of course, we had this move below the 50-day moving average line, couldn't hold through that. But now, as this got back above the 50-day moving average line, it's looking interesting again. I do have a position in this myself. We have it on SwingTrader, and this is one that's become a little bit heavier weight. Now, we did trim a little bit, so maybe walk through that.
Yeah, so we added it, as you said, we added it back as a full position as it went back through the 50-day there, and then we took some profits into it and reduced it as it was coming in, because it looked like it looked like it might fail, frankly, and we weren't sure if it was going to fail until we had the upside reversal yesterday. Because when over the weekend on Sunday, I was watching the overnight trading, and Kava, at least on my quote service, was down 9%. I think probably because maybe concerns about some of the ingredients coming from Mexico is my best guess with the tariffs. But for whatever reason, it was down a lot, but then wasn't down as much during the day, and then of course had that upside reversal. So we've added it back, and we've actually made it bigger, which is a style that I've always done, or I haven't always done. I did it really since God, I don't know. It's been over 20 years when I had a conversation with Bill O'Neill, founder of IBD, and he told me, if you get shaken out of something, to buy it back plus a little bit more, because it puts you on the offense to do that. As a whole psychological thing. And so we went with a little bit bigger than a full size position, because it looks like it wants to round out the right side of this cup. I'm expecting, as it gets close to 150 to 153, that it would probably pause and maybe form a handle there, and we'll see how we handle it around that point. But it seems like it's kind of blue skies to there. That would be normal and natural. But we also have the upside reversal yesterday. So that gives us a clear line in the sand because that upside reversal is down by the 50-day, which implies that the bulls really want to, push this one higher. And, if we come down underneath that, we'll have to exit it. But this looks, the other part of it that I like is the fact that it's not an AI stock. And with all the news around AI, AI can be up,
Hmm.
10% in a day on the right set of news. If the whole thing from China ends up, being not what everyone thinks it is right now, the deep seek stuff, then everything will lift. But if another deep seek comes out, they could take another leg down, and this shouldn't go with that unless it drags the entire market and everything goes down. So it has got less risk, from that, and it really feels like the wind is at its back. We'll see how it plays out. As always, we'll stay flexible, but I like having the diversification into non-tech.
Hmm. And to that end, we also have Costco that has been looking really strong. Um, Retail, this was kind of, it's tough sometimes holding Costco because it's a slower moving stock. And so sometimes it's real easy to kind of ditch Costco when it's not doing anything wrong just because you want faster stuff. But right now, this is offering us a little bit of that diversification.
Yeah, and I have a position in this as well. Yes, it is a slow pokey stock, but it's a quality stock. You don't have earnings for quite some time. That RS line looks just spectacular, frankly, and it looks like it wants to have a normal breakout. And if you look back at the base that it had in like April of last year, that one, that run, yeah, out of that base there, that's what I would expect to move like that. That would be normal and natural. But you also had some of these other base breakouts that didn't quite work out. So that's in its nature as well. You're not expecting this monster move unless some other news comes out, that is unexpected and very positive for it in some way. You're just expecting more of a steady little incline, which is also nice for us to have in the account. So we're not just adding exposure, we're adding exposure in kind of calmer names for the most part. Not all of them, but for the most part, they're just less risky because of the environment that we're in. And frankly, a lot of the heat, they're broken charts right now. I know they bounced up a ton off their lows from last Monday, but most of those are broken charts that we just don't want to trade.
Hmm. And a few folks are kind of mentioning that we're talking a lot about our exits. There's some really positive feedback here in the YouTube comments of kind of the style of taking these profits. It's working for a lot of people. But the other thing that a lot of folks are saying also, and I heard this when I used to be out on the road and talking to people individually, was sometimes they use SwingTrader, the product, for the early entries, and then they turn them into position trades. And we're going to maybe do that with a few select stocks, but yeah, if you get success that way, I mean, that's what we love to hear. We love to hear that you've turned a swing trade into a position trade and gotten a bigger gain out of it, even bigger than what we might have on the product. That's great news. So keep on doing that if it's working for you. And yeah, I think that's great.
I would just add on to that. I do that personally all the time.
Yeah.
We'll yank something off of SwingTrader, but I'll keep it myself, just like with the Spotify, because my risk tolerance is going to be different than the risk tolerance for other people. And also, what we're trying to do is we're trying to manage this as a swing trading product in a way that's educational. Of, okay, this is how we are swing trading. We're taking profits into strength in hopes of buying it back cheaper. But as you said, our A quality stocks, like we believe Kava is, we're going to try to hold for a longer move, like we did last time, and it didn't work out. But it is what it is, and we're doing this with a number of them. We're doing it with Twilio as well. I've got a position in that one,
As
and
do I. Hmm.
this is one that I'm looking, we've got it down to a half size position. Um, but it can doodle around here for 2 weeks or so and just stay between the high of last, 2 days ago and the low from the gap up and be totally normal. Now, hopefully it stays above 140 because it'll make it easier to hold on to that. But even if it were to come into the low part of this range, that would still be normal and natural after this big gap up. And we are, I'm just dying to increase the position size on this one. And we will if it sets up properly and sets up and then continues. So we might add to it. And if it's doodling around or doing something even a little bit odd, we'll just book, either book a tiny little gain or take a little loss on those additional shares and then wait again. And we're trying to hold on to this half position that we have because we're looking at this as an A quality stock.
And as a reminder, we have a really big cushion on this because we got into this at the end of the day. Here before this pre-announcement happened, we had no idea that was going to happen. But just looking at the chart, it was a nice setup day. Put it on at the end of the day. You and I had 3 minutes after it went off our restricted list. We have a 30-minute restriction period. So we had 3 minutes before the close to put it into our own accounts. Thankfully, we both did that. But yeah, now we can treat this different. We've got a lot of cushion on this. And now, granted, we don't want to let it, all dwindle away, but we've locked in some profits and, also have a couple different ways, some flexibility, I should say, in how we handle this. Anything else on Twilio? Because I also wanted to get to team.
The tricky part of that is we do have the earnings in 9 days. And so as you were mentioning earlier when we were talking, the ISRG had pre-announced and gapped up. And then when the earnings came out, they sold off on that. So that is the risk that we have, because even though they pre-announced, and that's what the whole gap was about, when they report their earnings, it's still a crapshoot because the analysts are going to focus in on one or two key metrics that they have, a margin or sales growth or what their estimate, who knows, but it could push it up a lot or it could bring it down a lot. So you're not really out of the woods until we get through those earnings. So it might line up with the chart where it just tightens up. In a perfect world, it would tighten up, and then we'll have those earnings and it will give us an opportunity at that point to increase our position. So we'll see. We'll take it one day at a time.
Yeah, maybe less risk, but certainly not no risk. So let's take a look at Team Atlassian. And this is one that had a nice gap up on its earnings and has been acting pretty well. I got, again, an upside reversal support right there just below 300. And this is one that we're a little bit heavier in.
Yeah, and I have a position in this as well.
Oh, I have a position as well.
Yeah, in fact, I had bought it for myself, and then it gave us an opportunity to add it to SwingTrader, so I sold mine and put it on, and then we then bought it back after our 30-minute window. And with yesterday's upside reversal, what that allowed us to do was add to it and then increase it. I think we increased it a little bit more this morning, up to a 5/4, so a 12.5% position, where our normal position is a 10. Because we have that upside reversal around number 300, and so it shook out below that and then came back up. So that is really a solid line in the sand. If it were to come back underneath that, it just wouldn't be normal, right? This should continue higher or at least go sideways and stay above the 300 range. So if it does that, we'll hopefully be able to hold on to this position and maybe even add to it and make it a 3/2 position or a 15% if it gives us that opportunity. So again, kind of in a nutshell, is we're starting everything off as a full size position, taking profits, on our second day that we have it, typically around a half an ATR profit. Then on the third day or more, around a 1 ATR profit, give or take. These are rough. And so most of the stocks we're going to be scaling out that way. but the select few that we really like and think that have a big potential, we're going to try to hold on. So it's going to be kind of a blend of position trading and swing trading, but the position trading is just going to be reserved for just a small number of stocks.
Very good. Well, you know what? Let's go ahead and shift gears, and we'll take a look at our pie charts. I'm also seeing some people that are mentioning in the YouTube comments how they're using, some of our alerts in a different way. They're using it to do cash secured puts, which on weekly options, which is I think that's very legitimate. You're going to be just collecting premium with the expectation that these are going up, and it seems like some people are having some good success with that. Certainly don't jump into that if you don't know options. I saw your face, Mike.
I don't even know what you're talking about, man. No, I do.
But hey, I like the.
I was like, I had to think through that. I was like, are they fading us? They're buying puts, and then I see what you're saying.
Cash secured, yeah. So you're selling a put, and of course you have the cash set aside to buy it in case you get assigned. But the idea is that you're just going to collect that premium as the stock goes up, or even if it goes sideways, you can still end up just fine on that trade. But let's go ahead and take a look.
I don't do options. Well, I do have some options, but I just do it the way Bill did it, just straight calls. Just I keep it easy, just as a way to leverage. I leave the fun option stuff up to you and Chris.
Yeah. So just to kind of recap a little bit on some of our changes in terms of our sector. I mean, you already heard us talk about Team and Twilio, and well, you know what, let me actually go to the current. We currently do have a very heavy weight in software. We're a little bit on margin, just slightly.
Like
I think
4%. I think.
Yeah, 5%. Something like that on margin. There's internet, there's medical, there's a big, almost as much as software in retail. So that's our Costco and some other, Kava.
We got some Walmart in there,
Right, Walmart. And then of course we have ETFs that are a little bit more broader based, including the ARC, and finance, leisure. So, pretty well spread out. Oh, medical. So we're pretty well spread out. Let's just kind of backtrack a little bit in time. Instead of going to last week as a comparison, let's just look at Friday, because again, after the downside reversal that ended the day, as you mentioned, we were on margin, a pretty healthy amount on margin intraday. But by the end of the day, because of that downside reversal, very heavy cash position, almost 50% cash, but still very spread out elsewhere. Software remaining very heavy, because a lot of those, frankly, were just holding up well. And you would also imagine that software, hey, there's not goods and goods there. It's services, not as affected by tariffs on that side. So those did hold up a little bit more. Anything that you wanted to kind of add to this?
No, I mean, we would have gone even heavier cash, frankly, but some of the things were relatively conservative because we had the RSP on there, which is really, we got that had that hard hit yesterday when we had to take it off. But that was abnormal action, for that. So the 55% was a little bit inflated, because some of the things were, and we had the U Pro on there, but SPY had been trading tight. And so, we backed out of those because, we were down on them and, wanted to exit, but then put that money elsewhere because, we went from the 55% to, where we're at now. And, we went pretty heavy yesterday as well, like, right away. And that's the ideal time for swing trading is when you get a downside reversal, you sell into it because you're raising the cash to hopefully buy on an upside reversal. Typically, when you get a downside reversal, your upside reversal isn't the next day. It's
right. I was just going to say, usually doesn't happen that fast.
Yeah. So that was a bit tricky because it really, God, it's been hard, but it's been fun too. And it's been working out.
Some people might be saying, "Oh, well, can't you guys make up your minds? What's wrong with you?" And I mean, that's just a function of what No one was saying that.
Oh,
I'm
I
just
was like,
saying.
what are you talking about? This is what
Right.
you're supposed to. It's swing
Yeah,
trading.
yeah. That again, it's showing the flexibility. We're going with what the market is doing. And when the market can't make up its mind, okay, it's going to look like, it's going to look that way, where we might take something, put something on, take it off, and then put it back on because it's got an upside reversal and it has a new setup. So that might happen. With this volatility.
Yeah, that happened with Bill too, because I
Yeah.
would talk to the trade. You got to see his sheet every day, exactly what he was doing, but he wasn't so much an open book with the rest of the PMs about exactly what he was doing. But I'd talk to the trading desk and they would tell me, oh, yeah, Bill was buying XYZ heavy, in the morning. And then midday, he was selling the whole thing. And then by the end of the day, he was buying the whole thing back plus more. I
Yeah.
mean, that was just how we're wired and how we were trained. And, frankly, my comfort level,
Mhm.
of doing that. And so you're going to see that on SwingTrader. We take something off, and if it firms up, because you take something off because you don't know what is going to happen, and you're managing risk. So you're either reducing it or eliminating it, and then if it holds up better than what it should have, and it's giving you that feedback that, hey, this is actually stronger than what we thought, then you got to put that back, and then sometimes you got to put it back with some more size. And yeah, so that's what we are doing and will continue to do. And sometimes it'll work, sometimes it won't.
And just to backtrack to last week, because we typically show the current and the prior. This is where we were last week. Again, after January 27th, this was the day after that. We had shifted quite a bit outside of the AI into a lot heavier into the software because that's what was working. We had already kind of gotten into retail and medical and consumer in some of these areas, but it was remaining heavy there and switching kind of the ETF out of the QLD that we sold on the 27th and into like the RSP and stuff like that. So anything to kind of close us out, Mike?
No, I think we've taken up everyone's time. And if anyone knows what the news is going to be tomorrow and the following day and next week, please, send it to my Twitter, DM me, because I'd like to know.
Yeah, you and me both, buddy. Thanks a lot, Mike, for your
Oh,
commentary.
what we should add is who's going to be on IBD Live tomorrow.
Oh yeah, we should. Mark Minervini is going to be on IBD Live. For those of you that are IBD Live subscribers, it's always great chatting with Mark. A lot of great insights that he brings to the market. If you're not an IBD Live subscriber, hey, join us. Get a trial. Go to www.investors.com/IBD Live. Check that out. It's again,
It's a
he's
lot of fun. I
a
never
great guest.
ramble on, not even once. I don't go on tangents. I stick to the point. Stock
Right.
after stock after stock.
Yeah. So Mark just had his 60th birthday a couple weeks ago. It was a great time. So we may have to share some stories from that because Mark Minervini on the drums is a sight to behold. So
I saw the
well,
videos. He rocks, man.
he
He's
does.
really
So
good.
anyway, thanks for your insight, Mike, and we'll be chatting with you next week. Or also, you can catch Mike on that SMT video every Friday. So make sure you tune in for that as he does an extended version of the Stock Market Today video. That's going to wrap it up for us this week. We'll see you all next time. Take care.